What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, two things we really need to talk about. One of them being the article that was released today, talking about the SEC charges two individuals for their options trading scheme. I want to give you my take on it because there's something I read in the article that speaks so much louder than what you're reading on face value and why it is very important. The next thing I want to talk about is the Robinhood and Citadel collusion. So let's get right into it. First off, this was the article that was released, talks about them selecting far out of the money put options and abusing some of these stocks. But there's something that I read in this that really correlates with how the SEC is feeling, especially when it comes to payment for order flow. So check this out. The SEC's complaint alleges that GU was able to generate illicit profits by using broker-dealer accounts that passed rebates back to their customers to place initial orders on one side of the market, and then using broker-dealer accounts that did not charge fees for taking liquidity for his subsequent orders on the other side of the market. This directly has to do with broker-dealer accounts passing rebates back to their customers. This is exactly what payment for order flow is, and why, when a market maker knows exactly where the flow is coming from, what side, the movement, where is all this volume coming from? Is it on the buy side? Is it on the sell side? They know exactly where the price action is going. That is literally like an individual going to a blackjack table, coordinating with the dealer, okay, and the deck is completely rigged, and they know that they can hit on 16, all right, and they know a 5 is going to show up. That's exactly what this is. And seeing that the SEC, yeah, sure, they charge two individuals. However, seeing that they were using the broker-dealer accounts that pass the rebates back to their customers, just says that they're still right on the ballpark of saying this payment for order flow, especially when there's manipulation, there's collusion, and when you are playing on one side of it, is not fair to you as the institution, or to any of the retail traders. If you want to be a market maker that accepts payment for order flow, that's fine, but you need to run as a sole identity to compete with other market makers. You can't also have another subsidy that operates a hedge fund that where you're going to be able to take out your call options and put options. You need to be a complete sole identity and completely on your own. And that's exactly where this plays right into what the SEC is trying to do. Now, the next thing I want to talk about is what happened with Citadel and Robinhood. And there is some stuff all over the internet, and I'm still really trying to dive into it and to see a little bit larger of a news outlet release what exactly is going on with Robinhood and Citadel. And especially there was quote unquote conversations that were supposedly passed by higher up executives at Robinhood, saying that there was going to be some issues with the payment order flow and liquidity issues happening on January 16th, as well as Citadel taking out massive put options on that date of January 26th. I'm sorry, guys. Massive put options on that date right before, and limiting the buying power, knowing that this was going to happen. I'm going to want to see exactly how this plays out. It's going to take a little bit of time, and I'm going to continue to cover this for you. Like I said, this article was released 6 days ago, and it talks about these lawsuit plaintiffs slam Robinhood and Citadel Securities for their payment for order flow, and it just directly correlates exactly what is happening with that manipulation. Last thing I want to talk about is just exactly where AMC is sitting now. I can tell just by the fact of the amount of interest in what is going on around the internet with AMC. It's very easy for me that some people are starting to lose interest on exactly what is happening, because we're consolidating. We're just sitting at $40. We're not moving up right now. And like I said, the buying power is still there. The holding's still there. All of the flow is still there. Just some of the interest of exactly what's happening, because like I said, the price action is low. But here's the thing. You need to remember, and I covered this numerous times before, we're hanging out at $40. It looks like we're probably going to close at near record low volume from dated months ago back. And that's exactly where we're hanging. We're not hanging at a low of $10. We're still hanging 500% higher from that $8 value on monster low volume, where they're not able to short the stock and bring that price action down. We're at 24 million shares traded. It's 2:30 in the afternoon. We have an hour and a half left of trading. If we close under 30 million, I will probably get just above it because we're going at the power hour. But still, that is a record low. Our 65-day average is close to 90 million. And that average has been dropping drastically. Okay, as you can see, the chart events still put up a bullish pattern. So I know some of this is gets to be a little bit redundant. If you can see the highs and the lows of today, which I've covered numerous times, the spread is sitting at about $1.10. You know what I mean? Even last Friday, I think it was 39.25 all the way up to it was $1.25. We used to see $6, $7, $8 swings. It's consolidating. It's getting tighter and tighter. And when the volume gets lower and the price action is not able to hammer it down, people are going to continue to scoop up these shares at the $40 level. So those are just two things I really wanted to cover quickly, talking about the payment for order flow and why that I want to take a little bit deeper look on exactly what the SEC had written in that article, and where I wasn't just looking at the two individuals, but seeing the fact of they're using a broker-dealer license to be able to manipulate and give, you know, incentives back to their customers to be able to get the flow on what side they want it to get on. So I'm going to really want to see exactly how this unfolds in the future. So that's it for this video, guys. I'll see you in the next one.